Hey everyone, Albert Stepniak here, ready to give you the lowdown on what's happening in the housing market in Florida. It's an interesting time and we're seeing some new trends emerge. So the big news is that we have more homes for sale than we've seen since before the pandemic. The number of active listings jumped up a good chunk compared to last year. This is fantastic news for all you buyers out there because it means you have more choices than you've had in years. Imagine over 1 million homes for sale across the country. We are still not quite back to the super high levels we saw before 2020, but we are definitely closing that gap. And this increase in homes isn't just in one spot. It's happening all across the US, with places like the West and the South seeing big jumps. Even right here in our area, and places like Las Vegas and Washington, D.C. are seeing lots more homes on the market. Now, here is the interesting part, and it's a bit of a plot twist. While we have more homes listed, we're also seeing something called delistings on the rise. What's a delisting? It's when a homeowner decides to pull their home off the market without selling it. And get this, the number of homes being delisted is growing even faster than the number of new homes coming on the market. It's like some sellers are testing the waters, and if they don't get the offers they want, they're saying, nope, not yet, and taking their home off the market for now. According to Realtor.com, this year's market is a study in contrasts. Buyers are loving the increased options, but many sellers who might have really high expectations for their home's price, especially if they bought a while ago and have a lot of equity, are deciding to wait if they don't get their desired number. This push and pull is really going to determine whether we move from a balanced market to more of a buyer's market and how quickly that happens. Because there are more homes available and buyers are being a bit more careful with their money, we're also seeing more price reductions. Almost 21% of listings in June had a price cut. That's the highest for any June since at least 2016. Even with these markdowns, though, the national median list price is holding pretty steady, which tells us that many sellers are still sticking to those peak era prices. They are willing to wait it out, whether for the right buyer or by pulling their home off the market, which is helping to prevent bigger price drops across the board. Homes are also staying on the market a little longer now, about 53 days on average, which is more like what we saw before the pandemic. So to put it simply, yes, there are more homes for you to choose from, which is fantastic. But also a growing number of sellers are saying, I'm not getting my price, so I'll just hold on to it for now. This dynamic is creating a bit of a stalemate. In some hotspots like Phoenix, Miami, and Riverside, California, sellers are particularly likely to pull their listings if they don't get the offer they want. Meaning that supply could come back on the market later at similar price points. People hesitate on both sides of the market. Buyers have more choices and are being pickier about price, while some sellers are stepping back if things don't go their way. The intense urgency we saw in the market a few years ago has definitely changed, and homeowners today are having to adjust their expectations. It's a really interesting time, and it means being patient and strategic is more important than ever, whether you're buying or selling. If you have any questions about what this means for your specific home goals, please don't hesitate to reach out. I'm here to help you navigate it all. Now let's talk about something that's on a lot of our minds right now, mortgage rates. So for the past 2 weeks, we've seen mortgage rates tick up a bit. For a popular 30-year fixed rate mortgage, the average rate is now around 6.75%, up from 6.72% last week. If you're looking at a 15-year mortgage, Those rates also went up slightly to 5.92% from 5.86%. Now, you might be thinking, what does that even mean for me? Well, when mortgage rates go up, even by a little, it can make a difference in your monthly payment. Those extra dollars can really add up, and for some folks, it might mean their dream home becomes a little less affordable. This is part of why the housing market has been a bit slow lately. We've seen home sales dip since 2022 when rates started to climb from their super low levels during the pandemic. It's just a tougher environment for many potential home buyers right now, especially with home prices still holding strong. You might be wondering what makes these rates go up and down. A lot of things play a role. It's influenced by what the Federal Reserve, our central bank, decides about interest rates, and also by what big investors in the bond market expect for the economy and inflation. Think of it like a giant economic puzzle. Right now, a key indicator for mortgage rates is the yield on the 10-year Treasury bond. That's essentially what lenders use as a guide to price home loans. Lately, those yields have been moving higher, partly because a recent jobs report suggests that the economy is doing better than expected, which might mean the Fed will hold off on cutting interest rates. So, where do we go from here? Most experts are predicting that mortgage rates will likely stay in a range of 6 to 7% for the rest of the year. It's not the super low rates we saw a few years ago, but it's also not the sky-high rates we've seen in the past. The recent rise in rates has actually caused some home shoppers to hit the brakes, with fewer mortgage applications coming in. It's a reminder that every little change in rates can impact demand. My advice? If you're thinking about buying, stay informed. Rates can fluctuate, and it's important to understand how they might affect your budget and purchasing power. And of course, I'm always here to help you navigate this market and find the best fit for your needs. Let's chat. With interest rates on the rise, you might be wondering how you can still afford your dream home. One option that's gaining popularity is an adjustable rate mortgage, ARM. Now I know what you're thinking. ARMs can sound a bit scary because the interest rate can change. But here's the deal. Many ARMs start with a fixed rate for the first 5 or 7 years. During that time, your interest rate won't change, which can mean a lower monthly payment right now compared to a traditional fixed rate mortgage. For example, I've heard of ARMs being offered with interest rates well below 6%. The key with an ARM is to be savvy. If you keep an eye on the market, you might be able to refinance into a fixed rate mortgage when rates drop in the future, before your ARM starts to adjust. It's true that ARMs are a bit riskier than fixed rate loans because your rate can go up later on, and there is no guarantee you'll be able to refinance when you want to. But for some buyers, an ARM could be the best way to get into a home with a reasonable interest rate right now. We're definitely seeing more people consider them. It's not just home buyers feeling the pinch. Home builders are feeling it too. Their confidence in the housing market is actually pretty low right now. Think about it. Builders also need to borrow money to buy land and materials. When interest rates go up, their costs increase. And at the same time, they often have to cut their home prices to make them more affordable for buyers facing higher mortgage rates. In June, for example, a significant number of builders, 37%, cut their prices, and the average price reduction was about 5%. That's a pretty big chunk of change. It's a tough spot for them, getting squeezed on both sides. You might be surprised to hear that international trade policies can impact your mortgage rate, but it's true. Recently, there has been some back and forth with US trade tariffs, which has made global investors a bit nervous. When investors are uncertain, they tend to charge the US government higher interest rates when lending them money. And guess what? Mortgage rates tend to follow suit. So what happens with international trade can actually trickle down and affect how much you pay for your home loan. I hope this helps make sense of what's happening in the market. It's a lot to take in, but understanding these trends can help you make the best decisions for your home buying journey. With the interest rates on the rise, let's talk about something really interesting happening in the housing market, especially for those of you looking to buy your first home or just downsize. Buyers are looking to smaller homes. With home prices still pretty high and interest rates having gone up, it's definitely a challenge to buy a home right now. But here is the good news. People are getting creative and home builders are responding. Home builders are actually building smaller, more affordable starter homes to help address these challenges. The median size of a new single-family home has actually gone down for the third year in a row in 2024. It's now around 2,150 square feet. To give you some perspective, that's down from almost 2,500 square feet back in 2013. And it's actually pretty close to the size we saw during the tough times of the financial crisis around 2009. Builders are adjusting to meet what buyers can afford, while buyers look like they're willing to buy slightly smaller homes to be able to afford them, given that prices have risen so high over the past 3, 4, 5 years, and interest rates remain relatively high as well. It totally makes sense, right? People still want to own a home, and if a slightly smaller footprint makes that possible, then that's what they're going for. Home shoppers find clever ways to achieve home ownership. This includes not just buying smaller homes, but also combining forces with family members and opting for what we call multi-generational living. That's when different generations of a family live together under one roof. While these situations might call for different types of homes, the main driver behind all of it is simply affordability. So, what does this mean for you, whether you're a first-time buyer or someone looking to make a move in Delray Beach? It means that the idea of a starter home is actually changing. In 2025 and beyond, we can expect to see more of these slightly smaller, more affordable options available. Builders are listening to what buyers need, and they're delivering homes that make home ownership more achievable. It's an exciting shift, and it opens up new possibilities for many people to get into the market or find a home that perfectly fits their current budget and lifestyle. If you're curious about what kind of starter homes are available in our area or how these trends might impact your home search, just give me a call. I'm here to help you navigate this evolving market. All right, I've got some fantastic news that directly impacts all of us living and working in Florida. A recent big study by CNBC, which ranks America's top states for business for 2025, just came out. And guess what? Florida ranked number one in the entire United States for its economy. How amazing is that? We beat out every other state when it comes to economic strength, which is something to be really proud of. Now, while our economy is top-notch, the overall ranking for Florida placed us at number 3 in the nation for top states for business. This is still incredibly strong, but it's important to understand why we weren't number 1 overall. While we got super high marks for our workforce, meaning we have great people doing great work, we rank a little lower in categories like business friendliness, cost of doing business, and quality of life. These other factors nudged us down to that still impressive 3rd spot nationally. Just to give you a comparison, North Carolina actually took the number 1 spot overall for best state for business. They did really well in their economy, coming in at number 3, and also scored very high for being friendly to businesses. So for those of us living and investing in Florida, this is fantastic news. A strong economy means stability, growth, and continued demand for real estate. It's just one more reason why our beautiful state is such a great work to live, work, and own a home. If you have any questions about how this strong economy impacts your specific real estate goals, feel free to reach out. Now let's talk about something really exciting happening in our Florida market. Commercial real estate is absolutely booming. Now you might be thinking, what does commercial real estate mean for me? Well, it's all about the buildings where businesses operate. Things like offices, shops, restaurants, and even warehouses. And right now, there's a huge surge of investment pouring into these types of properties all across our sunny state. Why is this happening? It really comes down to a few key reasons. First off, so many people are moving to Florida. Our population is just exploding. Secondly, we have some fantastic tax advantages here that make it very attractive for businesses. And finally, our economy is just really strong and dynamic. All these factors together are creating a perfect storm for commercial real estate to thrive. Let's look at West Palm Beach, for example. The retail spaces there are seeing record high occupancy rates. It's because so many high net worth individuals, financial executives, and even tech leaders have been moving to South Florida, especially since the pandemic started. Palm Beach County has gained nearly 90,000 new residents in just a few years. This really shows how West Palm Beach has transformed from just a seasonal vacation spot into a vibrant, year-round city. It's not just individuals either. Big companies are making moves too. We're seeing companies like Foot Locker relocating from New York City to places like St. Petersburg. These kinds of moves by major businesses show real confidence in Florida's future. When top investment firms and institutions open new businesses, new offices here, they bring with them a highly educated and well-paid workforce. These folks are looking for great places to live, shop, and enjoy life. And that demand is being met by fantastic mixed-use developments, places that combine offices, homes, and shops all in one walkable area. These kinds of developments create their own built-in foot traffic, which means businesses in these areas are really thriving. It's like a self-sustaining cycle of growth, and it's only speeding up. So, what does this mean for you? A booming commercial real estate market often leads to more jobs, more amenities like new restaurants and shops, and a stronger local economy overall. It's a really positive sign for Florida's continued growth and prosperity. If you have any questions about how these trends might impact your local community, or if you're looking to make a move yourself, don't hesitate to reach out. I'm always here to help. Last but not least, I've got some really exciting news that highlights just how popular Florida is on a global scale. We're talking about international home sales, and Florida is leading the charge. Between April of last year and March of this year, international buyers purchased a whopping 78,000 homes across the U.S. That's a huge jump, over 33% more than the year before. And it's the first time we've seen an increase like that since way back in 2017. In total, these overseas buyers spent an incredible $56 billion on existing homes nationwide. Now, here's where Florida really shines. Out of all those international buyers, a massive 21% chose to buy their homes right here in Florida. That's right. We've been the top destination for foreign home buyers for at least the last 15 years, and that streak continues. It really shows the global appeal of our sunny state, from the beautiful beaches to the vibrant cities. This surge in international interest came after the global economy started recovering from the pandemic. However, higher home prices and interest rates are still making things a bit tougher overall, so we're not quite back to pre-pandemic levels of international sales just yet. Because mortgage rates have been stubbornly high, a larger share of these international buyers, nearly half of them, at 47%, paid with cash. That's a lot more than the average home buyer. And they were also more likely to buy homes at the higher end of the market. It seems foreign buyers are really drawn to investing in American real estate, partly because our country has strong protections for private property rights. What does this mean for you, whether you're buying or selling in South Florida? It means continued strong demand, a diverse market, and a testament to Florida's enduring appeal. If you're thinking of selling, know that there is a global pool of buyers interested in what our beautiful state has to offer. And if you're buying, it speaks volumes about the long-term desirability and stability of property here. If you have any questions about the international market or how it impacts your home search, just ask. All right, that's a wrap for today's market update. I hope you found all this information helpful as you navigate your real estate journey, whether you're buying, selling, or just keeping an eye on things here in beautiful South Florida. I always love sharing these insights with you, and I really appreciate you tuning in. If you have any questions or about anything we discussed today, or if there's a real estate topic you'd like me to cover next time, please don't hesitate to reach out. Your questions help me make these vlogs even better for everyone. So that's it for today. Thank you so much for watching, and I'll see you right back here in a week for another update.